Welcome to Stocks in Translation, broadcasting from the New York Stock Exchange. I'm Jared Blickery, your host, and with me is the voice of the people. You know her as Sydney Freed. First, please like, subscribe, and comment on Stocks in Translation on Spotify, Apple Music, Amazon, or YouTube. Today, we are welcoming Patrick Dunawilla. He is a charted market technician and founder of The Chart Report, which has been my go-to daily market action report for years. So I'm a big fan, Pat, and it's great to have you. Today, we are going to be talking about technicals, which is our word of the day, what the market tea leaves mean, and what they really tell us about future prices. And this episode is brought to you by the number 60%, which is how big Bitcoin's slice of the crypto pie is, now $3.2 trillion, by the way. So Pat, let's just get your summary of the market action so far this busy year.
Yeah, I mean, so it's been kind of a choppy environment. You know, we got that post-election breakout, and then it was kind of short-lived, you know. The mega caps, there's a lot of concern about breadth, right? Like there always is. But I think small caps have carried some of the weight while, you know, the mega caps have caught down. They did finally kind of catch down a few of them. But I would describe it as rotation. Yeah. And yeah, I know it's only February, so it might be too early to be quoting year-to-date returns, but small caps are leading. And so I think there's a lot of constructive things going on beneath the surface. Ultimately, you know, I'd like to see, I'm watching my holy trinity, the banks, the home builders, and the semis. They led us into the bull market in 2023. And over the last few months, you know, semis started kind of lagging in July. Home builders have corrected like 20% in the last few months.
Sure.
And I think that's still within the context of an uptrend. So I wouldn't say, you know, they're done here, but I'm watching them and watching for clues for that next move.
Very good. And it has been a little bit different this year. We haven't had the concentration worries that we have in the past, but we want to get to our word of the day here, which is technicals. Technicals, or technical analysis, analyzes price movements and chart patterns to predict future trends. So traders will use technical indicators to set out their price targets, where they think the market is going to go, where they don't want the market is going to go. And this is something that works on stocks, works on crypto, bonds, futures, maybe even home prices. I haven't tried it, but tell us about technicals and the chart report, which is your baby.
Yeah. Well, so, I mean, to answer your question earlier, you had asked how I got into technicals, and it's really, I mean, through unsuccessfully trading fundamentals, right? And ultimately
That's a common story.
Right. And ultimately, you know, finding a way or needing a way to manage risk. And that's what technicals really provides you, is a way to manage risk. A lot of people like to think of it as predictive, and it can be in some ways. But I think ultimately it's about risk management and identifying trends too. Yeah,
let me ask you about, so you were enmeshed in the fundamentals world, and I'm just wondering, like, what kind of process you went through, because I imagine there are a lot of other people who will go through the same thing. What were some of the warning signs that you saw, okay, I need to reorient myself and think about things in a slightly different way?
Yeah, I mean, it's really just that. I mean, just needing some sort of repeatable process to make sure that you don't lose your shirt, because when you're trading fundamentals, let's say you're bullish a biotech stock for a drug that they're coming out with, it can be really hard to know when the story changes, when it starts to go against you. And at the end of the day, all that really matters is, you know, where you bought at and where you sold at price, right? You know, as our friend Brian Shannon says,
only price pays. Everybody together.
There you go. Yeah.
But can fundamentals and technicals go hand in hand? Can you use them both?
Yeah, absolutely. And I think some of the best trends out there will have both, right? And the technicals should kind of confirm the fundamentals over time. And that's kind of how I look at it. And, you know, I think a lot of technicians just kind of want to ignore it completely, but looking at how they kind of confirm or don't, I think is also really valuable.
Yeah, I'd raise Investors Business Daily, IBD. They do a really great job through the CanSlim method, which is what they have taught for 20, 25 years, probably longer than that. And it really does kind of mesh the fundamental analysis. Like, it's almost like a stock screener. Here's what you should be looking at. Here's the universe. And then you use technicals to get in, to pyramid, and then to get out. But they definitely, I don't want to walk all over fundamentals here and say there's definitely. And earnings and interest rate really determine what the stock market is, not necessarily technicals. That's just a tool. So with that, what's your favorite tool here in technicals?
Really just trend and just, series of higher highs, higher lows. But as far as indicators go, I'd say RSI is a really valuable one, looking for divergences.
Like momentum.
Right.
So if you see a stock go up, for instance, and it makes a new price high, it might make a momentum high, but not a new price high, and you look at divergences there. And
right. And then another indicator I use often is the VWAP. Our friend Brian Shannon was kind of the father of that indicator. And to me, it's just kind of like a more truer moving average. Moving averages, a lot of people use them for support or resistance, but it's really not price memory there. It's more for trend identification. What direction is the moving average moving in? Or that's how I look at it. But those VWAPs can really act as support or resistance. There's price memory there. It's the average weighted price.
And you're linking it, you're starting at a particular time. So it could be the beginning of the year, that would be important. It could be on an earnings report, that would be a big market moving event. It could be on a president's inauguration day. Like it could be any one of these big days.
Or a major high or a major low.
Sure.
Any event where shares are being traded heavily, right?
Patrick, I asked ChatGPT how to talk to a market technician. I was like, give me a good question. This is what it spit out.
We're a tough bunch to talk to.
I know. Yeah. How do you differentiate between a true trend reversal and a false breakout?
Nice.
That's
nice. It was all.
Can we get ChatGPT to answer this?
Yes.
All right.
True trend reversal and breakout. Well, I mean, you want to set your reference point at a major high or a low, and then once it gets below that, in the case of a breakout, if it falls below those former highs, that you have to err on the side of caution.
I'll put it this way. If you have a level that price has not been able to get through, we'll call this resistance, and then suddenly it does break above, you want to see that resistance act as support. That's a very basic way. Sometimes you get this break above and then it immediately dips back below. That's the false breakout. That's what we're trying to prevent against. So I would just say price action is kind of, and it doesn't get any more simple than price action. What is this bar saying? What is this bar saying in reference to it?
Right. And back to the breakout question, I think a lot of people might see a breakout fail and they'd say, okay, well, technicals don't work, right? Well, they're not listening to it. Technicians will see it and they'll say, okay, that's the signal. That's information. So learning how to interpret these things, and it's not just as simple as just buying the breakout. And I think on the surface level, technicals looks that simple, but there is some nuance to it. And really just kind of here's the pattern and then how the market reacts to it. And then taking that as the information.
So what's the biggest mistake you can make when you're not understanding technicals? What someone's misunderstanding an indicator or something like that?
What's the biggest mistake?
There's no magic bullet. Some people think it's a magic bullet and that if you just adjust the parameters, it's going to fix all your problems. If you got problems up here, it's not going to fix those. So I think that's one of the big ones.
And curve fitting, if you're back testing and stuff, you can fix your parameters so it looks great, but then when you actually apply it in the real world, it can be much more challenging.
And when I say, you got to be right up here, I just mean you got to approach trading the right way with the right attitude, because you're looking in the mirror every time you look at your profit and loss statement. That is you. And if you're lying about it to yourself, which I've done, and I had to get away from that, but if you lie about your P&L to yourself, you're just going to run into more problems. It doesn't fix anything.
Right, absolutely.
All right, tell us about the chart report. As I said, this is one of my favorite reports. This is actually my first open in the morning. You publish it at night in the evenings, but you're going through the X posts all day and you're gathering stuff from our favorite technical analysis friends.
Right.
How do you curate this stuff?
Yeah, so I mean, it really started from the idea that there is so much great research and charts and stats being shared every day on things like X and social media. And we wanted to aggregate that, put it all in one place so that we could kind of identify trends and themes that are emerging, and highlight some of those voices too. So as far as putting it together every day, put it together after the close, and I have my go-to kind of sources. Some people I'll go to and check their feed first.
I've been on a few times.
You have? That's right. But yeah, I mean, I describe it as really the newsletter with no news, just charts.
Going back to your holy trinity, so you said banks, home builders, and semis, right? How did you come? How is that the holy trinity?
Yeah, I mean, so those are just three really economically sensitive groups. If those three are doing well, I mean, chips, they're in just about every electronic device out there. I mean, really important broader market leading indicator. Home builders also really economically sensitive. If in fact, in 2023, they let us into the bull market. The narrative at the time was, we're going into recession. That was kind of the consensus belief out there. And we saw home builders breaking out to new highs and saying, well, why are home builders breaking out to new highs if we're going into a recession? So that was an early indication that that we weren't, and that maybe things were a little bit better than people believed at the time.
So they're off their highs. They're well off their highs now. Do you see them coming back a little bit? Like, are you encouraged?
The home builders, I do think of the three are probably in a place where they should stand up from here. I think you could kind of look at the correction over the last couple months as healthy. I know it doesn't feel like that when you're sitting in it, but it does, reset the trend and allow it to continue higher. And so I think in some ways, that last 2 months was healthy. And at this point, just waiting for those rates to just drop. If the 10-year can stay below 4.7, I think that'd be really constructive for tech and other areas.
You know what's great is it doesn't matter who sits in that chair. It could be a macroeconomist, could be a technical trader, it could be somebody who's enmeshed in fundamentals. Yeah. Everybody's watching the 10-year.
Yeah.
And everybody has a level. It's between 4.5% and 5%.
Yeah.
On that note, we got to take a short break right here. But coming up, we're talking Bitcoin dominance and also in crypto, where we have a very serious who wore it better. It's going to make you think twice about inverse head and shoulders patterns, I promise, or at least in a new light. This episode is brought to you by the number 60%, and that is how big Bitcoin is with respect to all of crypto, roughly $2 trillion, and that's a total market cap of $3.2 trillion. And Pat, what strikes me about this is that really hasn't changed a lot over the years. We've seen huge swings in the price of Bitcoin, 80% down and then multiple hundreds of percent up, but Bitcoin is always the biggest by far. So What does that tell you?
Yeah, I think, and especially, we saw Bitcoin dominance break out to multi-year highs this week, with everything that happened over the weekend. Sure. Crypto really got killed. And I mean, what that's really saying is, the meme coin market's really just fallen apart relative to Bitcoin. And I think that's interesting. I think that proliferation that happened this weekend, I think Bitcoin was relatively fine. I mean, it's still just range bound between that 110.
Technically, it's held up pretty well, but the rest of the coins, I mean, a lot of the other coins look terrible right now. And so do we have the same concentration worry in crypto that we might have had in stocks at various times?
I don't think it's quite the same. I think it's a little more nuanced than the breadth that happens in the equity market, but I do think that if anything that's more bullish for Bitcoin. That speaks to it being the real leader in the space. But yeah, that's kind of how I see it. I'm not sure that some of those other meme coins are going to be able to recover.
Like even Doge.
Right.
I mean, we say about it tongue in cheek, but then these meme coins, they keep coming back.
Yeah.
And Dogecoin was left for dead years ago. It's coming back in a big way, or it has, even though it's fallen down. I guess my big takeaway with crypto is don't count anything out permanently because anything can come back at any time. And yet that's the hope that keeps people in these crypto tokens when things are going south, which leads me to our next discussion, which is of risk management.
Yeah.
You gotta live to play another day. So how do you do that with technical analysis?
Yeah, I mean, that's the beauty of technicals, right? Is it gives you a clear point, a clear line in the sand where you are wrong below this level. Whereas, like I was mentioning earlier with the biotech example, it can be really difficult to see when the facts have changed. When your thesis changed, and human nature being what it is, we'll hang on to our thesis and try as long as we can and wait it out until nobody likes to admit they're wrong. It's uncomfortable.
If you listen to people on X, there are traders who are right 99% of the time.
Right,
And that's the
right.
gold standard,
Yeah.
which is totally not true. I know lots of
Yeah.
professional traders in derivatives and futures who are happy to have 40 to 50%.
Absolutely.
And the momentum traders, they only need 1 out of 3 trades sometimes.
Right.
You swing for the fences, you make one, you can absorb some small losses. So yeah, living.
Is there a difference in risk management for the type of asset we're talking about? So equities versus crypto versus bonds. Is there a difference in how you approach it?
Yeah, I mean, for crypto, I think you have to give it a much bigger leash, right? Maybe the wild swings that it has, you have to position size accordingly. You have to make it so that you can still sleep at night, and you can participate in the upside, but you're not, just checking this thing every day and losing sleep over it. So position sizing is one way to kind of account for the differences in volatility between bonds, which trade just hardly, and then crypto, which is just so bipolar. So I think position sizing is one, and then just as you're setting your levels, as you're setting your risk management, just keeping in mind that volatility. So yeah, I'd say that's how you'd mitigate it.
And within technical analysis, going back to crypto,
Yeah.
is it a different approach for equities versus crypto? Are there different charts that you use, different indicators that you follow?
Yeah, absolutely. I mean, in crypto markets, they trade 24/7, right? So
Bitcoin never sleeps.
Right. So we're looking more at like 4-hour charts. That seems to be more appropriate. Like the 4-hour chart for crypto seems to be similar to like a daily chart in the equity market.
And that's common in foreign exchange too,
Right,
currency
right.
traders.
Yeah. We borrowed that from. I mean, it's a currency, right?
Sure.
So I mean, depends who you ask, but yeah, but so borrowing that from the forex traders, using shorter time frames, things like that.
You have a unique vantage point because you're in the newsletter business and you're also calling all this stuff from X. So I think, you would have your finger on the pulse here. Any trends within technical analysis, like this is doing well or this market is hot, anything up and coming?
Yeah, the China story. The China story is so interesting right now. I think you have 2 parts of the story that make it really, really interesting from a technician's perspective, and that's relative strength and then the hated sentiment. And those 2 together, I think, are a really potent combination. And if we start with the relative strength,
break it down.
I mean, China actually outperformed last year, and it's funny because most of that happened in September. It was 20% monthly gain.
It was like
that month.
bazooka Kiwi on the markets.
Right.
Almost.
Yeah, exactly. They came out and they said they were easing, and then just shot up. And then you got the blessing from David Tepper. He got on CNBC and said a bunch of very bullish things, and then of course it corrected, but it still managed to outperform the S&P. Of course, it was a lot more volatile, but over the trailing 12 months, it's actually up twice as much as the S&P. Now it got murdered on the way down, and that's what caused this hated sentiment. I mean, sentiment is just this. It's been abandoned.
And that's also happened so many times over the last 5 years.
Right.
That very rug pull.
How many times did we see the words like uninvestable and China in the same sentence, right? That was a very popular thing to say early on last year as China was testing this long-term support level, the FXI, same place it bottomed in the financial crisis and in 2022, and it held it again last year. And since then, it's continued basing, momentum's held up well. It's retested the 200-day a few times.
That's great. So what do you want to see going forward? Like what tells you this thesis is happening? I should be working this.
Yeah. So I right now, I mean, if you look at the FXI, it's kind of formed this little like channel ever since the summer. I'd like to see it bust out of that channel and then start reclaiming some of its Fibonacci retracements. It already reclaimed one, so I think just seeing it go to the 61.8% Fibonacci retracement.
Last holdout for the shorts.
Yeah, right. And short interest is very heavy. I mentioned that second part of the story, the sentiment part. Short interest on FXI is like 41% when I last checked, which
That's
is
huge for an
incredible.
ETF.
Yeah. KWeb, it's like 12%. So short interest is still elevated. I think you still have some maybe lazy shorts in there, or and that coupled with the fact that it's showing relative strength is, I think, just a recipe for a chase.
All right, we got to get to today's Who Wore Better. So This is the ultimate technical analysis runway showdown where the timeless elegance of chart patterns face off against the high-tech precision of modern indicators. On one runway, we have chart patterns, the tailored suits of technicals stitched together over multiple time frames. The head and shoulders, it's a double-breasted power move. Cup and handle, smooth curves with a structured breakout. Sid is laughing, pure sophistication. And don't get me started on that broadening megaphone pattern. All right, on the other runway, we've got indicators, lots of indicators, derivatives of price and volume that sometimes form their own patterns. But RSI is arguably the pulse of momentum, while MACD is a layered ensemble blending moving averages like haute couture. And who can ignore the breezy Bollinger Bands, breathing life into charts as they expand and contract? Pat, who really wears technical analysis better? Is it the patterns or the indicators?
Ooh, I'm going to have to go with the patterns. I think the indicators are a derivative of price, and the patterns are really just price behavior. And when you're seeing something like a triangle forming or a head and shoulders top, let's talk about the psychology behind a head and shoulders top. I mean, you have a high, and then you have a higher high, right? And then it can't breach that, right? So that's showing you that it wasn't able to it didn't have the same strength. Buyers weren't as aggressive on that third peak. So that's telling you that trend might be losing power. So there's a lot of psychology behind those patterns, and that's why I'm going to go ahead and pick the pattern over the.
Well, I love it. Yeah. I love it because there's a lot of psychology embedded in market patterns and also just the candlesticks. You see a big wick, and that is either fear or greed at its most basic level.
Yeah.
Are there like new indicators or patterns that are formed? Like, who creates them?
Yeah, absolutely. I mean, there are, and that's been one cool thing that's been going on in the crypto space is seeing them develop a lot of these different indicators that they might borrow things from traditional finance and applying it to this new asset class. I think that's been really cool to watch.
Do they just get named after whoever identifies?
Larry Williams, famous commodities trader, invented a lot of this stuff in the 70s, and I should know the names better. I'll have to study for the CMT test and take that at some point, but a lot of these are really old, but yeah, you're right. Some of them have been refreshed. You take Pete Stottlemeyer's work from the 1980s, which is, the market dynamics there, and that kind of morphed into volume profile. VWAP itself, like anchored VWAP, is from the 90s. That was Paul Levine and the Midas method. That got a facelift, and Brian Shannon really brought it forward into the new century. So there's a lot of history here.
You just wanted to say VWAP.
And
you got me, Ethan. That's all right. That's all
There's a big debate whether it's VWAP or VWAP.
Oh, we've had
on the floor here. It's VWAP.
It is. Yeah. Okay.
VWAP,
all right.
VWAP.
I'll defer to them.
We have about 30 seconds left. Do you have a final word for investors?
Yes.
Look at more charts. I think listen to the price action of the market, and go sign up for the chart report.
All right, Patrick Dunawilla, and I think we've learned a lot here today. I know I have. And guess what? We are out of time. We have wound things down here at Stocks in Translation. So be sure to check out all our other episodes on the Yahoo Finance site and mobile apps, also on your favorite podcast platforms. We will see you next time on Stocks in Translation.